Good morning, students. Today we will learn how we can make the profit and loss account. As you know, in the chapter final account, or we can say financial statement, we have learned what is trading account and how it is prepared. After making the trading account, we make profit and loss account to know the actual profit or actual loss in the financial year. So we should understand all the direct expenses come in the trading account and all the indirect expenses come in the profit and loss account in the debit side. Okay, and what are the incomes given in the question? They will be recorded in the credit side of profit and loss account. What is direct expense and what is indirect expense we have understood in the last video. Today we will make the profit and loss, and we should understand the profit and loss starts from the gross profit or gross loss which come from the trading account. If the gross profit is in the trading account, that will be carried down here in the credit side by gross profit brought down, and we will write here amount. After that, all the indirect expenses will be debited in this account. Now, to understand each and everything very clearly, we should take a question, and we are taking that. Firstly, the gross profit is given in the question 10 lakh and 52,500. We will write in this side 10 lakh 52,500. Now we will see all the items one by one. If that item is indirect expense, we will write in the debit side, and if that item is income, we will record in the credit side. Okay, firstly the trade expenses is given, so we will write here in the debit side to trade expenses, and the amount is 10,000. The next is carried on sale. So we will write here carried on sale. Students, when only carriage is given, it will become the direct expense and it will go in the debit side of the trading account. And we have discussed, after any item or any expense, if it is written on purchase, suppose it is carried on purchase, at that time it will not be entered in the debit side of profit and loss account, because that expense is on purchase, and that amount will go where it will go, it will go on trading account. And in front of any item, if it is written on sale, that will become indirect expense, and that will be entered in the debit side of the profit and loss account. So it will be recorded in debit side. Next item is office salary. Office salary, and the amount is 79,000. Carriage on sale is of 50,000, and office salary is 79,000. Postage, we will write here to postage, and the amount is 3,600. Next item is office rent. Office rent, and the amount is 37,500. 37,500. Next, legal charges. These all are indirect expenses. Legal charges. And the amount is 2000. Next is audit fees. Audit fees of rupees 8000. And the next item is donation. Amount is 5500. Next is sundry expenses, and the amount is 1800. Next is selling expenses. The amount is 26,600. Next is discount allowed, and the amount is 15,000. Next is lighting. Lighting is also an expense and it will come in the debit side. So the amount is 3,900 will be written. The next item is student. The next item is commission received. Now you are seeing the received word is written. It means it is income. Because it is income, so it will be recorded in the credit side. Commission received. And the amount is 4,200. Next is bad debts. What is bad debt? This is a new term. Whenever in our business, whenever any debtor does not give some amount of the goods that he has to pay, and he never gives that amount, it means that amount will not be recovered from the debtors, is called bad debts, and so it will become like an expense. So we will write here two bad debts, and the amount is 6,000. Next is discount, but discount, not only discount but discount credit is written. Discount and in bracket the credit is given, it means it will be recorded in credit side because credit is already written. Means you receive this discount, you are not giving discount, you are getting benefited with this discount, so it will become the income and it will be entered in the credit side. The amount is 3,000. Next is interest on loan. When you took loan, you will have to pay the interest on that loan, so it will become an expense, and we will write in the debit side interest on loan. What is the amount? 11,000. The next one is stable expense. This is also an indirect expense. So we will write here stable expense is of 7,000. And the next is export duty. Export duty. And the amount is 11,500. Next is miscellaneous. This is not miscellaneous expense. This is miscellaneous income, and all the income will be recorded in credit side. So we will write here miscellaneous incomes, and the amount is 2,500. Next is unproductive expense. All the productive expense will go in trading account, and all the unproductive expense will come in profit and loss. The amount is 20,500. And the last one is traveling expense. This will also be recorded here. Traveling expenses. Amount is 12,500. After doing this, now we will add both the side and find the balance. When we add both the sides, the total will become, we will see which one is bigger. The total is 10,62,000 and 200 is the total of the credit side, and in this way we will add all these items and see if the total is smaller, because this amount is much bigger, so this side's total will be bigger, and we will write in both the side 10,62,000 and 200, and when we will deduct the total of the debit side at that time, the difference amount would be 7,50,000 and 800 will come, and this difference amount will be called net profit. Net profit, and in bracket it will be written transfer to capital account. And when we prepare balance sheet at that time, this amount of net profit will be added in the amount of capital in liability side. On the other hand, if the debit side's total is bigger than the credit side, at that time the difference amount will be written here in the credit side, and that difference amount will be called by the name of net loss. So we will write here by net loss, and in bracket you will have to write the same transfer to capital account, and that loss amount will go in the balance sheet at the time of preparing balance sheet when we write the amount of capital inside, and at that time this loss amount, net losses amount, will be deducted there. Okay, so I think students you have understood what is profit and loss account and how it is prepared. In the next video we will see what is balance sheet and how it will be prepared. Okay, till then, thank you, stay home, stay safe.